right? Which led to this small trade. So you could have gotten this small trade, but they were creating liquidity here, and then this was a lower time frame, full body closure, but higher time frame, liquidity grab. There we are. Liquidity grab, and then we had our full body closure also. But it was a bearish trend. Okay, so it's just something that I wanted to highlight to you for some extra info. Now I want to get to liquidity because I absolutely love liquidity, right? I think let's go through some live examples in the charts. So number one, liquidity is, I want to identify with you guys equal highs, equal lows. Okay. So I want you guys, I'm going to delete all this stuff. To identify some equal highs, equal lows and liquidity. Go. I haven't, okay, let's quickly start with trend line liquidity because I haven't explained the others. So trend line liquidity, I want you to underline trend line liquidity with me. That's one, right? Awesome. That's also another one. Can we also say that this is another one? Nice. Darren's on it. So I want you guys to go back to this, specifically this, just sit there and identify the liquidity, right? So we've got all these types of liquidity. Then we know what equal highs and equal lows are, right? That's pretty easy what that types of liquidity is. Can we quickly remove all this, please? And then, thank you. I can remove it also myself.
Mr. Michael.
What's up?
So what are equal liquidity, equal highs liquidity or equal lows liquidity?
Equal highs, equal lows is when the market comes to a specific area. Remember, we said it in supply and demand. So where they make equal highs and equal lows. You guys got this in your first class as well. It's identifying a higher high, higher low, lower high, lower low, and then identifying equal lows and equal highs. So this was a equal low, right? And then we have a equal high that looks exactly the same as that.
Okay.
Okay.
Thank you.
Well, good. So then we're going to identify equal highs, equal lows liquidity quickly. You guys are going to identify it with me. Coming back to this, can you guys identify? It's a bit more tricky, so I think I'll zoom into specific areas and then we can identify them. Can you guys identify some of them in this area? So we have our first one. I love it. So we have our first one here. We have our second one. We've got a major one here also. We've got another one here. Well, you guys are on it. Okay. I've got another question for you guys. How many of you are a perfectionist? It's a reason for me asking this question. How many of you are a perfectionist?
I think a lot of us are.
Yes.
Okay, right? In the market, you've got to let go of perfectionism, right? So you've got to, I know this sometimes kills OCD, but you've got to make do with equal highs, equal lows looking something like this. And equal highs, equal lows, or a trend line that's not a perfect trend line, but looking like this. For example, this is a good question. Remember that you asked me this question, and look how it came back to grab the liquidity in a liquidity wick. Right? Okay. So you've got to let go of perfectionism, right? So this was another equal low, equal low. Sometimes equal highs. Now this can't be equal highs though, like you can see, but just more or less merely equal highs, because this is equal highs, but it's not perfection equal highs. Okay. I had to let go of that though, so by the way, so there was a reason why I was asking you. Now, I want to get to something that's very important, is not important, but very nice to understand, is weak liquidity. Okay. So weak liquidity happens when there is a current wick. So we can identify we've got this highs and lows, these equal highs, right? And then we had this equal highs, and then they came back to this area and they grabbed this liquidity. Can you picture for yourself what happens in the market here, right? So what happens in the market here is we've got all these big buying orders for them to push price to this area and then take out all the stop losses that's lying above this for them to take out the early sellers. Okay. So they buy into this area. Okay. And then when they get to this area, all of a sudden they are selling. Okay. And they're hitting orders again of supply and demand. But in order, this is supply. So there was maybe an order lying just above this, because banks are smart, of 700 million by example, and then they just push price down, right? So this is a form of weak liquidity, and this you will learn also. There's a reason why I'm explaining to you that they are buying, and at this area, that specific area above your higher high of your equal highs, they were starting to sell. Let's have a look at it. Not that far back. Okay. They were starting to sell. And then I want to have a look at you with you guys at how the weeks look like, right? So we have this week, and then I want to see the 1 minute as well. Ugh, no data available. No data available. So we've got that. Where am I now? I absolutely hate it when TradingView does this, but we've got that trading. We've got that equal highs.
At the very bottom to your left.
Thank you here. Thank you. So we've got this where they bought this area. So they bought, and then everything above this, right? When they started to grab all of the stop losses and all of this, the buy stops, etc., they were starting to to sell, right? Because the agenda wasn't to push price up. The agenda was to grab liquidity. So then they started to sell and sell. So then this becomes our weak liquidity. Okay. Most likely, majority of the times, they will come back for weak liquidity. And a good example is here. Why will they come back for that weak liquidity? In order for them to close this orders that they used to grab the liquidity. So they were selling at this order, but they were selling at such a fast pace and rate that they didn't have the time to close the buy orders, right? So now, or the buy orders, yeah. So now when they sell, they've got this major drawdown in the buys, but they have the accounts to be able to handle that. So then they have to come back to that area in order for them to close that sales. Can you see that they merely mitigated this area in order for them to close that sales or that buys? Okay. Other example was here and here. In order for them to create more liquidity, which was equal lows. And another equal, call it an equal low as well. Are you with me about weak liquidity?
Yeah.
Michael,
Yes.
where you are, like, okay, you just moved.
Okay.
But yeah, there.
Yeah.
See that really long wick? So there was a full body closure below it. No, towards the left.
Oh.
Sorry. Yeah. Would that also
Yeah.
be wick liquidity?
What do
So
you mean
then
there was a body closure below it?
if you look to the lower low on the right,
This one.
no, back left. So the equal lows basically.
Yeah.
Yeah, so there was that really long red candle close below the that really long wick. So would that be? I'm just gonna draw on the chart quickly so then you can
Yes,
see what I'm
please.
talking about. So
Please.
like there,
Yeah.
like you can get close below that wick. So would that be wick liquidity as well?
Yes, but remember they were yes, it would be. It is, and they were creating still their low, their fractal low, right? So this is the high and this is the low. Then they were creating the low. This was the low.
Yeah.
This was also part of a weak liquidity, but there was an agenda for them pushing this to this certain area that you will learn, which happened here. And then this was weak liquidity. That was weak liquidity, that major weak liquidity. And then they started to pushing price down.
Okay, cool. Thank you.
Okay, pleasure.
Michael,
Yes?
I have a question. Like, what if the candlestick, like the wicks are long on both ends and the body is really small?
If the wicks are
Long, like on both ends, and the body is really small.
then that's just liquidity grab. That's nothing other than liquidity grab because they usually do that sometimes on New York Open. You would find that a lot on New York Open. And sometimes during news, but majority of the time during news, you will see
Thank you.
them pushing him to a certain area. It's a pleasure. So this is a good example about your question, right? Which I wanted to get to. So they were creating a certain trading range, which was, this was your low, this is your high, okay? At this high, everything above it is a liquidity grab. So this wasn't considered a liquidity grab. Are you with me? Everything above that with a wick was liquidity grab. So that was a small liquidity grab. That, and that was a small liquidity, or not a small one, but that was a big liquidity grab. Okay. Because it didn't have full body closures above it. Are you with me? Okay. I'm going to see. Sorry? Couldn't hear you. Yeah, okay. Let's quickly move on to, so that's liquidity, right? So now I quickly want to identify everything with you guys. So can we give Michael time to just show us? So I just want to go through everything with you guys. So we're going to identify everything all together now. Okay. We're going to identify a supply zone, and we're going to identify a demand zone, right? So at this area, where did the market start? Let me do this. At this, where did the market start pushing from at this area? I know it's a simple example because it wasn't really a major push, but where did the market start pushing from in this example? This was falling from, that's correct. So then this is our supply. And then this is our demand. Okay. I want you guys to see this demand to supply flip. Can you guys see there was a demand flip to supply? Okay. And why? It was actually flipped to demand again, which is very interesting. And this is also part of liquidity grab. Now, this is a liquidity grab because of the demand flip to supply. Flip to demand. Are you with me? Because there were orders lying above, underneath here, and there were sell stops lying underneath here, and there were stop orders lying underneath here, and that's why they grabbed that liquidity. So what I want to get to you guys is whenever there was a move, right, and you don't understand the move, I want you to go fish. I want you to go understand and find out why did the move not happen, because there's always a reason for that. And majority of the time, the reason is liquidity. And then you find the reason why was the liquidity grabbed. What was the reason because of the liquidity being grabbed? And in this case, it was demand flip to supply, flip to demand. Okay.
Sorry, Michael.
Yes.
The problem with what I'm seeing now is that you just erased it, because now there's a demand turned into supply, right? But I also see a change of character on your thing.
Okay,
on your
where?
right here, on your right, yeah, there. Because there's a change of character, and then because one would see that there's a change of character, and then would wait for premium to hit and then try to go down. But now, because of the supply zone turned into demand, now that will be confusing.
Okay,
Do you understand?
understand where was your change of character here? Why was this your
When
change of character?
was broken down. Sorry?
So, did you draw this line?
Yeah.
Okay. Why was this your change of character?
Because the low that made the high was broken.
Was it broken?
Isn't
Because-
it a breaker structure?
Because this was my low.
Okay, so we've only violated the low and then we went up.
And this was my high. So none of those were taken out.
Okay. I get it. I get it.
Awesome. I'm glad.
Michael,
I'm glad. Yes.
regarding the change of character there, but like if it was on the 4 hour or whatever, then we can consider that as a change of character, right?
Yes. So
Okay.
if there was if this was, for instance, let's go to the 4 hour quickly. If this was a change, there was no change of character here. Can you see? Because even this was my 4 hour move. Can you see? Even this was my 4 hour move. And because there was nothing creating another high, and they didn't take out this low, right? So everything in between is still cats and mouse, but there was, remember I said there's a reason for them mitigating this area, because on a weekly, we
Yes.
have,
Supply. We have liquidity.
yes, and we have this high, which is the fractal high, the daily high. Okay. So there was a reason why. So they come to this area, and can you see the liquidity grab? Right? Okay. That's why the market is in this state specifically right now as it is. Why it's just cats and mouse the whole time. Why it created a high and a low and didn't break it yet. Because there is big orders that they are busy closing. Liquidity graphs don't change the trading range. No, liquidity graphs don't change the trading range. This is very important, guys. So remember, in order for you to have a new trading range, it must be a full body closure. Look at this quickly. It must be a full body closure. Oh, what am I doing? So this was? This is liquidity graph.
So so liquidity grab.
Yes. And also trend line liquidity. Okay. This is a good
So I
example.
want to ask you.
Okay. But I don't think that they will come to take out this equal highs, in all honesty. I don't really think so, because this is a very protected high where we are at now.
So I want to ask you there by
It's a
the last
violation.
candlestick.
The last candlestick, this
There by
one.
that one. If it was now it's just the week, closing. What if this candlestick was closing fully? There is no a week. Is it a break of structure, or
Yes, it's a
is
break of
still
structure.
it will be a break of structure. Ne?
So what I wanted to tell you guys, and then I got caught off because if I see liquidity, I'm like a small kid with a new toy. So liquidity, in order for you to have a full body, you have to have a full body closure in order for you to have a new trading range. And a full body closure is the body of the candle must close above. So this was, can you see that this was just liquidity?
Yes.
Can you see that that even was a liquidity grab? And then they had a full body closure. So then they were creating a new range, which was this. Okay. But there was our break of structure, not here. On this candle was our break of structure, not on this one. Okay.
Okay. Yeah, now I understand.
Okay.
I understand.
I'm glad. I'm really glad. Okay. So I want to get to supply and demand quickly. Having good examples of supply and demand, right? I want you guys to understand. Yes.
So before
Can
you
I
go to
ask something?
Okay,
Before
sorry,
you
I
go
didn't
into-
ask if everybody wrapped up with liquidity. Yes, hit me up with a question, liquidity.
before you go into supply and demand, but it's relative to supply and demand. You see where you have drawn a line,
Yeah.
the low line, right?
Yeah.
So if you to have a range, the range would be from that low to that high, where you have written the break of structure.
My
The
range
low
from this low,
no, the low before that one,
or this one,
yeah, and
to
then
that high.
up there would be, it would be your range there. So for
So
you
that would be
to
my previous range, yes.
yeah, for you to determine that point, you'd have to have your fib and everything. But how do you see that in terms of demand?
In terms of demand or supply?
In terms of demand, how do you find a demand, a point of demand from there? Because if you're using confidence, I'd think that you're using the thing, the premium and the supply and everything that we have learned before.
Yes. So remember, we are using everything in between. So number one, just to give you a quick example, but I don't want to jump into that because I want you guys to go and I'll give you this example and then I want you guys to do it. This example. So you have your trading range and you draw your premium and premium and discount. And then in that to identify supply and demand zone. So where did the market start falling from in this area? At that area,
There.
right?
Yeah. Okay, so that's where the supply flipping into demand comes in.
That's correct. That's a demand flip, a supply flip to demand.
Okay.
And then
'Cause I was
also
confused.
it's all good. It's all good. So then also let me just accept this for brilliant. And then also we have our new trading range, and in our new trading range we have our premium and discount. Right? This becomes our point of interest. Let's say we delete everything behind this. Okay. It didn't tap into our premium yet, or our discount yet. So we identify our point of interest is in this area. Okay. Because we want to buy in discount and sell in sell in premium. So then can we identify in this area, where did the market start pushing from? Yes, so the market started pushing from this area. Okay, and then we have our lower time frame though, which should be our 1 hour, let's say. Where did the market start? Can you guys see that they were also, this was a mitigation area, right? Where did the market start pushing from at this area? Let's jump to the 15-minute to make it a bit more clearer. Where did the market start pushing from? Exactly this area. Okay. So now, can we see that we have this major point of interest that we had now refined into this small point of interest? So I'm going to do this quickly. Extend to the right and extend to the right. Right? So we want to buy at these areas. Now look at how it came to react to these areas. Can you see number one, first small order, second small order, third small order, fourth small order, third small order, or how many amounts of small orders? And then what they did was create liquidity in order for them to take the liquidity. And then what they did was create more liquidity in a demand zone in order for them to take the liquidity. Because there was a, can you see the 15-minute supply zone? And then we know that this is a weak liquidity. Right? And then we had our low, our high. It used this high to break this low. We had our change of this was our new low, this was our new high. We had what do we have here?
Change of
Very
character.
good. Change of character.
Change of character, perfect. So then we have our new high and our previous low, which was that. What did they then do? Create equal highs, which is liquidity. And you had your entry. What would you do for your entry? This was our trading range. Point of interest. So it came to our point of interest, our low point of interest. We then go fish. I think this is all part of the liquidity graph though, but let's see. So that's our 1 minute and that's our 5 minutes are a bit bigger. Let's take our 5 minutes rather than 1 minute. So the market start pushing from 5 minute change of character. And then we had our entry.
Michael, I see you always select a specific candle. Is it the last up and down candle to identify the supply or demand zone, or what? How do you get to that zone?
It's a very good question. I see the Zoom's going to end just now. So let me start another.